Thanks everybody for your time. So with this panel, we're just going to focus on preferred structure, strategies, and communications that are working in today's environment for multifamily, single family, virtual family offices. And there's a lot of ways of skinning the cat here, but before going into it, I'd love for everyone to just take 2 minutes and introduce yourself and your group and who you're with. Do you want to start off on this side?
Yeah, sure. Hi.
Yeah.
Hi, everybody. Thank you for the opportunity to be here tonight under the bright lights and great community here. Our foundation focuses on archival and history of our family legacy, as well as mentoring as a means to social and economic good. We have a 20-year legacy of doing that, and really going back to the origins of my family with Wilhelm Maybach in the late mid-1800s and the first Mercedes, first modern car. Family office-wise, we're probably 50% real estate. And then, as I'm based out of the Silicon Valley, we spend a lot of time in that space as well. Anyway, a pleasure to be here.
I am a second-generation family office, and we started our own family office in America, which is Varda Family Office. We did that after a very successful exit with my dad in a gas and storage facility in about 2014, I think. And our focus here right now is really focusing on technologies in safety and security center that helps our world to be a safer place for our children. We are actually in defense sector as well, and looking forward to speaking with everybody today.
The way I would describe that is what we do is we're looking for families under $250 million in a simple typical situation is a family with a business. They got 4 kids. Some in-laws are involved in the business. 2 of the kids are involved in the business. 2 of them are not. They're starting to think about what's going to happen when mom and dad die. They're 80 years old. And they go down to the attorney and they do their typical wills and trusts, divide everything by 4. And you can imagine what's going to happen to the family. We try to keep that from happening, and one of the ways we do that is by helping them build and operate their family office and a family foundation.
Hi, I'm Sahil, based here in beautiful Beverly Hills, just a few minutes up the road. I run a multifamily office here, which really runs the gamut from real estate to further larger investment advice, tax advice, asset protection, philanthropy, fleet management, whatever it is, you name it, both here and abroad. Investments-wise, we're mostly focused on real estate, both on the equity side and on the debt side. Particularly private credit is a great place to be right now, but also in this crazy world where anything can happen and inflation is at 8% is not crazy. We're also chasing those larger asymmetric returns that can beat that, and that often comes from venture, but we're always open to very unique and interesting structures.
I'm a 3-time tech founder and exited all 3 times, most recently to Bank of America about a year ago. We mostly focus on fintech and SaaS. That's half of our company. And the other half of our company loves retail and multifamily commercial real estate. So if you have a tech startup or any kind of software company here in the audience, we'd love to hear from you. Or if you're looking for a GP on a partnership, we'd also like to talk to you on the real estate side.
I was a wireless guy for a number of years. I was an operator for T-Mobile, independent operator. I built up a network of 150 of my own stores. I sold that in 2017 and stood up a family office in Utah, where I'm from, with my 2 older sons. And we've been focused on primarily 2 areas: cash flowing real estate and a number of asset classes, multifamily, assisted living, manufactured housing, a number of things. And then also in private equity, in independent sponsored, smaller deals, cash flowing, typically roll-ups. We like seeing childcare, dental care, HVAC, a number of opportunities where you can take a small cash flowing business and bring a bunch of them together and get a nice arbitrage on the cash flow multiple. So that's what we're focused on.
Great. Great. Now, when we're going into preferred family structures, there's, multifamily, single family, virtual family office, centralized, decentralized. I would love to, maybe Danny, you could just start off, just describe like the org chart and the structure, of your family office right now.
So we're less than 10 employees. I would say we're a little bit more focused, heavier focus on the tech side currently, just because of the current real estate market. That's a beauty. We've always been 50-50 tech real estate for the last 20 years. One of the benefits of that is when we feel like the real estate market's getting a little overpriced, we tend to focus more on the SaaS side. When we feel like the software side's getting a little bit crazy, we tend to focus more on the real estate side. I can't share the numbers, but we had a 49.5 time multiple on our fintech company that we sold to the bank.
Right.
So that's why I don't get that excited when I hear 18% IRR. When you're used to the software and tech side, you get used to those kind of multiples. So right now, I would say we're about 10 employees. 7 of us are focused more on the fintech, SaaS, business software side, AI, et cetera, et cetera. So that's sort of how our org chart looks. Then we have our own in-house, on the real estate side, we have our own in-house legal counsel, development team, as you want to call it. So we bring a lot to the table, but most of the real estate deals we're doing today are 2 or 3 GPs come together and we take down a project. So we're not really raising capital that often. When we do, we usually get it filled within 24 to 48 hours. But the 3 real estate projects we're doing right now, it's either just our firm or it's us and 1 or 2 other family offices.
That's great. And Kip, what about you? How is your family office preferred structure right now?
Well, we're a multifamily office is the way I would describe what we do. And again, because we have families from $30 million up to 9 figures, it's very different for each family. So what we really do is we focus on not only the financial side of the family, but we deal heavily on what's going on in the family relationships, because if you don't solve the family relationships and all the conflicts that are going on there, it doesn't matter what you do on the financial side. It's going to go away at some point in time. So really, the answer to your question is we spend so much more time. And again, we do all the financial stuff from all the investments, but we spend a lot of time on governance and uncovering all the family dynamics and getting the family around the table to have open conversations about what does the family want. And again, traditional estate planning is, like I said earlier, mom and dad do it by themselves, and that's going to be a disaster. We want the kids to be involved in the succession planning.
Great. And Natalia,
Yeah, so we are a single family office. On the top, it's also a relatively small team. We have a little bit different structure because we're actually utilizing a public vehicle on OTCQB, which a lot of people don't understand a lot of advantages that it has over, NASDAQ and other boards, because we are not only majority shareholder, but we have 100% voting shares. But what it does, it helps people who want to participate, it provide them some liquidity. So we use that vehicle as incubator for some of the technologies that we do, take them to the market. We also have, a media company. That's what we use to help companies to get to the market. But also we do just investments in safety and security space. We're always looking for other projects in this area for point of roll-up, so investing, because, once they graduate and have their minimum viable product, then we put them in different SPEs, do roll-ups, do M&As or take them public. So that's kind of overall structure.
Okay. Sahil, I know you do with your dad. How are you guys set up? What's your preferred structure?
Yeah, our office is certainly much more virtual than not. It really is just me in terms of executive, and I've got 2 employees both in a separate time zone. And I'm sure we'll get to that a little bit later, but touching on what Kip said, the culture part is really, really important, because a family and, a family enterprise is something that exists that should exist even when all the money is gone, right? What do you have left? You have all the different types of capital that your family can accrue, whether it's social and to do with their reputation or maybe strong religious values or whatever. Because, everybody always says, shirt sleeves to shirt sleeves in 3 generations, rags to riches to rags again. But we don't really think about what one level deeper, well, what does that really mean? It means that, well, say if you're on your second generation and they're paying, their insurance, their taxes, their rent, whatever, the actual dollar that they're using is likely not a dollar that was generated in the previous generation, because all of those running operating expenses. What's required is to have that culture of wealth generation, of accruing value, so that things keep flowing in as time goes on, as the generations goes on, and then you don't have that problem of reverting back to sort of the financial state your family was originally in.
Okay.
Thank you. You said that pretty much the way I paid you to do that.
If you are a founder, raising capital, developing real estate, or you're an investor, would love for you to get involved in the Family Office Club. I've run this community for 18 years now. We've hosted 300 live events. We have 17 million social media group members and followers. We have the #1 YouTube channel on family offices. We have the #1 most popular podcast on family offices. You can learn more about us and our membership options at familyoffices.com. We have 30 in-person events planned in 2026 and another dozen events this year. Please go to familyoffices.com to learn more.